All right. So, on average, how long would you say that you keep your positions open for? Let's start with Dave.
On average, my positions are several hours to a few days, maybe a week or two at the fringe. But I fall into that swing trading camp for sure.
When the market goes up, it goes down. You're essentially just looking to place your entry at a top or a bottom, and then go for a little bump up or down.
Yeah, and I think one of the things that people should factor in is that you got to play to what your comfort level is, what your risk tolerance, your personality. That's where I'm happy. I'm not happy trying to make a big macro bet. It's not that I'm not happy. It's just that's not where my comfort level is. I like to kind of get some sort of an immediate verification that I'm correct, and then ride it up for a bit. That just suits my personality. That doesn't mean it's right for everybody else, and that's kind of where my sweet spot is.
And I'll throw the same question over to Priyesh. How long do your positions normally last for? What do they look like?
So for me, the time horizon is quite a fluid thing. At the moment, as I said, from a macro perspective, you're focused on the economic recovery. So that's something that plays out over the next couple of years. So at the moment, the average holding time is around 3, 4 months on my positions. I've had positions which have been open for the last 8, 9 months, some which have just been a few weeks. But at the same time, if we go to last year or even 2019, this time last year when you had all of that panic in the markets, um, I was getting in and out of trades pretty quickly, just holding for maybe a few hours each day. Before that, you had a lot of Trump headlines and Brexit headlines in 2019. So again, you jump in on the headline and you let the move play out over maybe about an hour or 2 hours, and then get out of the trade. So, for me, I would say that the underlying macro trigger for the trade is going to determine how long I hold it.
And what kind of risk are you able to, or drawdowns do you stomach per trade?
So the way I trade is I try to scale into my positions, so I don't jump into an entire position in one go. And the way I'll do that is the way I'll determine my trade size is based on the average daily range of the instrument I'm trading. So I'll calculate it to be something like uh, one average daily range is risking about 0.5%, and that keeps things consistent. And then with the shorter term trades, you'll have a bit of a tighter stop. So you might only be risking around 1 or 2 average daily ranges with your stop loss. Whereas a longer term position, you might be looking at something like 5 or 6 average daily ranges.
So if a daily range is this big, you're thinking, okay, it could go this much or this much, and you kind of factor that in.
Yeah.
Okay. Okay. How about for you, Dave? What is the
Um,
risk?
I keep it pretty basic. I'll risk anywhere from 1 to 2% of my entire portfolio, so to speak. So, maybe I've got my FX account over here with X amount of dollars in it, but my portfolio's, let's just use round numbers. Say portfolio's a million. I've got 100 grand in my FX account. I'm going to be risking anywhere from 1 to 2% of my portfolio value, and using the margin and leverage afforded in an FX account to trade, pretty decent size in there. But I think the thing that a lot of traders run into is they start sizing their trades based on what their trading account value is versus their whole picture. And when they have winning trades, you're not really moving the needle on your whole portfolio. So I think it's really important to use your portfolio. And for me personally, I don't want to risk any more than 2% on a per trade basis. Um, and that's not 2% of, I'm not allocating 2% of my capital. It means that if I get stopped out, I've lost 2% of my portfolio. And I think that's a pretty reasonable number, because inevitably you're going to have, a string of losers in a row, three, four, five. It happens. I mean, nobody's perfect, of course. And, you start getting north of a 10% drawdown. If you have five losing trades in a row, that's a tough one to come back from. So think about it in the other context. If you're not really thinking about risk and you're unknowingly risking, let's say 4 or 5% per trade, and you hit that 4 or 5 losing trades in a row, well, now you've got yourself a really nasty hole to dig out of. And from a mathematical standpoint, just to get back to break even, you're probably looking at returns of, anywhere from 30 to 40% just to get break even. Not only to mention that you're beaten down mentally, it just took a massive drawdown. So this is a marathon. This is not you only live once, which is the common acronym that's being thrown around. I want to be around next year. I've been around since 1995. I want to be around in 2025 and in 2030. So you've got to manage that risk. Live to trade another day.
Yeah, well, you each mentioned something really important. Live to fight another day, for sure. And you got to scale into positions because there really is no perfect entry. I think a good entry is being able to scale your entry throughout the ups and the downs, so that way you're not putting everything at one level. You understand the market goes up and it goes down, and if you think you're going to put a trade in and it's going to go your way right away, I think you're mistaken in that. So you got to be able to scale.
That might happen one time out of 10. But not everybody's looking at the levels you're looking at, so don't be surprised when you get into a trade if the market goes the other way, which, again, as you said, scaling in. For me, I have a zone. I'm thinking, well, I think prices are going to basically stall right in here, and I'll start to nibble. I'll give you a good example. I'm looking to get long New Zealand dollar. Not yet, but when I start doing it, I'm going to nibble at it because it's been in a pretty good downtrend for the last couple of weeks, and I'm not in the business of trying to call bottoms or tops. That's a really, really tough game. But I'll start to scale in once it looks like prices are bottoming. Doesn't mean they are. But if I go all in the midst of a downtrend and I'm wrong, that seems to me like a really silly way to do it because you're going completely against the trend.